Welcome traders and investors to the introduction of the Supply and Demand Trading Strategy Module 1A. The introduction to the Supply and Demand Trading Strategy examines how supply and demand affect the financial market, including the stock market, stock indices, Forex market, bonds, futures market, cryptocurrencies, commodities, and SPY ETF. Before we start, let's look at supply and demand in general and how it impacts our daily lives. What is supply and demand? Supply and demand is a fundamental economic concept that describes the relationship between the availability of goods or services, supply, and the desire or need for those goods or services, demand. In general, when the supply of a product or service increases, all other things being equal, the price will decrease as suppliers compete to sell their products. Conversely, when the supply of a product or service decreases, the cost of that product or service will increase as buyers compete to purchase the limited supply. On the other hand, when the demand for a product or service increases, all other things being equal, the price of that product or service will increase as buyers compete to purchase the product. Conversely, when the demand for a product or service decreases, the price of that product or service will decrease as suppliers compete to sell the product. The intersection of supply and demand curves determines a product or service's remedial price and quantity. This is the price and quantity at which the market clears, with all available products sold and all potential buyers satisfied at that price. What is supply and demand in the financial markets? The concepts of supply and demand also apply to financial markets, such as the stock market, Forex market, bond market, futures market, cryptocurrencies, commodities, and ETF. In the stock market, the supply of shares of a particular company is determined by the number of outstanding shares available for trading. The demand for shares of a specific company is determined by the willingness of investors to buy those shares. When there are more buyers than sellers, the stock price will increase. When there are more sellers than buyers, the stock price will decrease. Let's look at Apple's share price and its impact factors. Apple's positive financial performance, such as solid revenue growth, high profit margins, and consistent earnings reports, can increase demand for Apple shares as investors anticipate higher investment returns. News and events related to Apple, such as product launches, acquisitions, legal issues, and administrative changes, can impact investor sentiment and cause changes in the demand for Apple's shares. The technology industry is highly competitive, and changes in the competitive landscape can impact Apple's market share and growth prospects, leading to changes in demand for its shares. Overall changes in broader market conditions, such as interest rates, economic indicators, and geopolitical events, can impact investor sentiment and influence demand for Apple's shares. Analyst reports and recommendations can influence investor sentiment and demand for Apple's shares, mainly if the reports highlight positive or negative aspects of Apple's financial performance. Share buybacks and dividend payments can influence the supply of Apple shares by reducing the number of shares outstanding and can also impact investor demand for the stock if they signal management's confidence in the company's prospects. All these factors play a significant role in determining the direction of Apple's share price. Its impact can be seen in its price movements around the supply and demand zones on the chart. The major players in the market, like big corporations, institutions and investment banks, are the market movers and lead the trade transactions by monitoring the market with advanced trade technology to execute trades according to their trading plans. As of print 12 May 2023, the daily price structure suggests the price of Apple shares could pull back if it fails to hold above 175.70 and 174.30 supply zone, an active zone in 2021 and 2022 major corrections. The Apple share price fully recovered from the latest correction in August 2022, as indicated on the price chart, and could repeat previous price action. In stock indices, the supply and demand of the individual stocks that make up the index contribute to its overall supply and demand. For example, if the majority of stocks in the S&P 500 index are in high demand, then the overall index will also be in high demand, leading to an increase in the price of the index. Here are a few factors that could impact the supply and demand for the S&P 500 index. Changes in economic indicators such as gross domestic product, GDP, inflation, employment, and consumer confidence can influence investor sentiment and impact demand for stocks in the S&P 500 index. Changes in interest rates, particularly by the Federal Reserve, can impact the demand for stocks in the S&P 500 index, as higher interest rates can make stocks less attractive relative to other investments. Strong earnings reports from companies in the S&P 500 index can increase demand for the index as investors anticipate higher investment returns. Global events such as political instability, trade tensions, and natural disasters can impact investor sentiment and influence demand for stocks in the S&P 500 index. Changes in investor sentiment, such as shifts in risk appetite, can impact demand for stocks in the S&P 500 index. The Federal Reserve's policies, such as quantitative easing and changes in the discount rate, can impact the supply of money in the economy and influence demand for stocks in the S&P 500 index. The S&P 500 index price chart mirrors the Apple price chart performance in the recent price rally due to the fact that Apple's share price is at the top of the list of companies that make up the 500 companies in the S&P 500. The Microsoft price chart shows a similar trend in its recent price rally as it holds the second rank among the top companies in the S&P 500 index. The 500 lists of companies are rated based on weight. For example, Apple shares, AAPL, are at the number 1 spot at 7.48%, followed by Microsoft, MSFT, at 6.68%, and Amazon, AMZN, third place at 2.89%. This explains why Apple's and Microsoft's share prices moved similarly to S&P 500 index. The index spent the past 4 weeks trading around the 4,104 and 4,138 supply zones in line with previous trading activities in August, November 2022, and February 2023. Despite many attempts to breach this main level, the index seems to be struggling to advance and continues to crisscross this significant zone and could head down. Major resistance at 4,225 and 4,310. It will be interesting to see if the index can break through the current barrier and reach 4,225 and 4,310. The supply and demand system has proven to be a reliable tool you can count on combined with the order flow system or on its own to provide a clear and reliable direction based on price action. We will continue on the next video, which will cover the Forex market in Module 1b.